Is it time to be exiting the market? That's basically what we want to be talking about in this video today. So I've been asked quite frequently by my students whether or not we have already reached the peak of the market and now might be the opportune time to actually be exiting the market. To be really honest, I don't have a crystal ball in front of me to say exactly if now is the right time to be exiting the stock. I typically would actually fall back on some signals that I use to actually track the market, and one of the platform that I actually use to track if I should be looking to exit the market based on the different time horizon is the Traders GPS platform. I've talked about this numerous times in terms of identifying the right timing to enter or exit a particular stock, and again, this can also be used to help you to determine if now might be a time to be exiting your stock. But of course, this actually depends on your trading horizon, and today if you're looking at it from a longer term basis, now might be a little bit premature to say that the peak has actually set in and we should actually be looking to exit our position. As can be seen from the chart over here, which shows the SPY, the S&P 500 ETF on a weekly basis. Typically, I'll use this chart to determine on a long-term trading horizon if I should be looking to exit or enter or remain in the market. At this current juncture, we have seen that for the last 3 weeks, we have actually been in a correction mode, but it's, I would say, still premature to be looking to exit my position totally on a long-term basis because the candlestick has yet to change color. As you can see, this could be one indicator that the bear market might have set in and I should be looking to exit. But even then, this is not a foolproof method, as can be seen over here, whereby we have got a short blip. The candlestick changes color from blue to red, and subsequently after 3 weeks, it actually changed back to blue and then start of a new bull market. So it's not exactly foolproof, but it's an early indicator, and as can be seen previously as well, if you actually go back to the 2022 period whereby there's a bit of a market weakness. I would say not a bit, but the S&P 500 has actually went into a bear market territory with a 20% correction from peak to trough, while the Nasdaq has in fact declined by close to 40% during the year 2022, and this would have been a good indicator to actually have help us exit our position or in the market when the candlestick changes from blue to red, and we have actually would have seen a then subsequent reduction of about 21% since then, and we actually got back into the market shortly after it. But again, there's a little bit of whipsawing over here, not exactly foolproof, but that would actually have guided me in terms of when I should be looking to enter. So more importantly, yes, it gives me a signal to exit, but also it provides me with the confidence to re-enter the market again when the time is right. So just by following the candlestick, the change in the color of the candlestick, this is a very simple method for most retail investors to actually determine if one should actually be in the market on a long-term basis. So this is on a trading on a long-term basis, and for those who are looking at trading on a shorter-term basis, you can actually be looking at it or referring to the daily chart. Now, coming to the daily chart, let's take a look over here. If you have been trading on a daily basis, which means a time horizon of roughly about 3 months to 6 months, that's the typical time horizon that I'll be looking at if I'm using the daily chart. I would already have exited. As you can see from the chart over here, the candlestick actually changes color and there's actually a signal to be exiting somewhere around the $540 level. So that was sometime last week. So there would actually have been a signal to exit your positions if you're trading on a medium term basis. So just by looking at this platform and by trading using the change in candlestick color, it is very easy for retail investors to actually be following. Now, if you are looking at it from individual stock basis, a lot of popular stocks that most retail investors would have been invested in, like let's say for example NVDA, again, there would actually have been a signal for you to have exited somewhere in about the 115, 116 region. So NVDA is one of them. Let's take a look at some other counters like Tesla, for example, very popular. Magnificent 7 trade. So Magnificent 7 trade, Tesla, no signal to exit yet. Right now, there is actually the change in terms of candlesticks. So for students who are actually looking to trade it, or have already traded it, or have a position in it, you might want to actually be noting that there's a change in terms of candlestick color, and you should be prepared to exit accordingly. So that's for Tesla. Other popular names like Microsoft, for example, the other Magnificent 7 names, you would actually have exited again about 1 to 2 weeks back when the candlestick actually changes color. So that would have actually been an early signal. You would not have been able to capture the top. No platform would be accurate enough to actually be capturing the top, but this is nimble enough or flexible enough for you to be able to identify the potential drawdown much earlier as compared to some other platforms, right? So over here you can see that you have been exited sometime at the $440 level as compared to where the current price is trading at this point of time. Other names like, for example, Amazon, all the popular tech names, you would have looked to exit pretty early when the candlestick changes color from blue to red. Okay, so this is a very simple indicator. So if you're trading on it from a medium-term perspective, I would say a medium-term perspective, about 3 to 6 months in terms of time horizon, then you would have looked to exit quite a number of your stocks already. Okay, you would have either taken profit or looked to cut your losses, and that would have resulted in, for example, in this case, not having to witness that drawdown in terms of share price. This is likely because of earnings related price movement. So that's for Amazon. So as you can see over here, that on a longer term basis, if you are looking at it from a longer term basis, if you are prepared to actually hold these counters for 1 year and more, it's still a little bit premature to say that that correction is taking shape or the bear market is really setting upon us. Is just right now a marginal correction on the longer term basis, but on a medium term basis, yes, that would have actually been a signal for you to actually have exited your positions already. So again, depending on your time horizon, you can make the right decision accordingly. And if you are looking at it from a longer term perspective, you want again to have confirmation that that candlestick changes from blue to red color, and that's where you'll be looking to trigger your exit point. Now with that, what are some of the names or industries or sectors that could be in play right now when typically all the 3 indexes are in correction mode, especially for the tech sector? As we all know, the Nasdaq is already in correction territory. Correction territory is one whereby from peak to trough, it is a decline of 10%. If it's a bear market correction, that's where from peak to trough is going to be a 20% correction. So right now, the Nasdaq is already or have already corrected 10%. The S&P is around 5 to 6%, and the Dow Jones is roughly about 3 to 4%. So the correction is not yet that significant or broad-based across all the indexes. It's mainly the tech-related names that have been hard hit, mainly because they have already risen quite strongly since the start of the year. So a lot of the names, if you are trading on a medium-term basis, you should be looking to exit based on the signals. Or my students will already have exited based on the signals. Now, which are some of the names that could still be looking to be relatively resilient amid the current, I would say, correction in the broad-based indexes? If I were just to look at the screener function and to screen according to the share price strength, I can see that a lot of healthcare names. Over here, I can take a look. A lot of healthcare names, utilities names, they are the ones that's actually holding up relatively well. If I were to go over to the NYSE and take a look at which are some of the sectors that is holding up or the share price are actually pretty resilient, again, I can screen by strength, and For here, you can see pretty similar situation whereby there are some financial services names, but mostly we are looking at healthcare. Again, healthcare, some real estates because potentially interest rates might be coming down, and real estates will be one of the key beneficiaries of a lower interest rate environment. Healthcare, utilities again. So again, common theme across both the NYSE and the NASDAQ is that this healthcare sector is holding up quite well. Utility sectors are holding up quite well. And of course, the REITs, some of the REIT sectors are also potentially interesting place over here. So again, if you are interested, you can actually be looking at some of these names. And this platform actually gives a very quick bird's eye view of which are some of the names, specific names that are doing quite well over here. Okay, so for example, on a healthcare basis, if we were to take a look at one of these names, Waters Corp, you can see that this counter is looking to be trading close to its 6 months high or 52 weeks high. Pretty close to that level. Now it's at 345. It actually has got a signal for entry not that long ago, last week. Okay, and right now the momentum is actually building up for this counter to be breaching or testing its 52 weeks high. And if this level can be broken, it could mean more potential upside. So definitely one of the names in the utility sector that I'll be keeping my eyes out for. Quick summary, on the long-term basis, I think it is still early to be saying that we are in a correction mode and you should be looking to get out of your position. On a medium-term basis, if you're trading with a 3 to 6 months time horizon, yes, you should already have gotten out some of your positions in some of these names, popular names I've highlighted previously. And today, what might be some of the names that you can still be considering if you want to be trading on a medium-term basis? I would say take a look at counters in the healthcare, in the utilities, as well as potentially in the REIT segment, which could see some resilience amid a rotation out of the growth names into some of this, I would say, more stable, recession-proof counters. Okay, with that, thank you very much. I'll see you guys in the next video.